Good morning, Bill here with another edition of Metal Minutes. Today is Wednesday, June 23rd, 2021. Well, we've got gold down 3% for the week at 1801. Silver's down 6% at 2631. Platinum's down 5% at 1105. And palladium's down 5% for the week at 2661. This is actually an encouraging sign, and we'll talk about that in just a minute. But for the year, we have gold up 2% for 1 year. We've got silver up 46%. We've got platinum up 32% and palladium up 37% for the 1 year mark. Now, why this is encouraging is we've had an incredible beatdown on the spot price of metal. And this is as we are closing in on the Basel III implementation time. And banks are trying to close out their short positions and offloading these unallocated metal positions that will not be as profitable for them. In fact, they'll probably be a net expense going forward. And so there's lot less reason for them to hold those positions. So those are being liquidated as we move into this final week before June 28th. And so there's an incredible paper smash that's been going on. Look at it as a gift by the bankers around the world that are making silver and gold more affordable for us. Because while the spot price has been hammered, the physical metal prices are still soaring, and the premium between spot and physical continues to expand. It's continued to be a lot wider than normal for the last 20 years. So while we've seen spot prices beat down, physical metal continues to be in high demand. Central banks are continuing to buy gold. They've bought several tons already this year, 90-some tons. I believe it was first part of the first quarter, and another 70 is expected to be added this quarter. So a lot of people are buying physical gold and silver. And what we've seen is that in the ongoing up to and including where we are currently with preparing for Basel III, we've seen spot gold up 39%, but physical gold is up around 57%. Silver, it's even more impressive. Spot silver price, since we started talking about Basel III in April of 2019, that there would be a gradual increase in the price of metal as we got closer to this implementation date. Spot silver's up 72%, but physical silver is up 140%. And so that's a gain that only those of us that have been purchasing physical metal are able to see. Those that buy paper gold or paper silver, they don't see that extra gain. Only those that have been stacking physical gold and silver. So I know we have a lot of new silver stackers in the last 3 or 4 months, but many of you have been doing this for the last few years, and you've been able to see this nice gain in your portfolio. I want to encourage you not to sell, because even though prices are beat down, remember, oftentimes before a launch, there is an incredible beatdown. And if you think about when all conditions were right for higher metal prices in the financial crisis of 2008, 2009 time, gold initially went down a couple $100. It lost about 20% before it doubled. So it was at around 1,000, it went down to about 800 before it shot up to around 2,000. So let's not get washed out with this temporary downturn. Use it as an opportunity, if you can, to build your metals positions. And another thing to remember is the seasonality of gold. we're at historically a low period for the year for gold before it begins to rise again. So there is a pattern, and we have a lot of conditions setting up to help gold move forward. And keep in mind, the physical price is over $300 for a gold eagle, for example, over the spot price. And silver, it's up about $16, $17 above spot. So spot is becoming less relevant as a pricing mechanism compared to physical. So that's something we'll have to get used to going forward, and I believe we will. I've got an article this week on the effects of Basel III and what's likely to continue to change for us. And so I'll put a link to that in the short article attached to this video. Check it out. Hey, we'll see you next week. Thank you for tuning in.